I'm your host today. Along with me, I've got Tamkin Riaz and Hanif Ismail. First of all, Ramazan Mubarak to all our listeners. It only seems yesterday we were together. And yes, it's been a year. It's been a year of Corona, a lot of issues to talk about. But this afternoon, we are going to talk about tax planning. And if you've got any questions, please feel free to contact us and we'll try and attempt and answer those. First of all, if I can just say, we are actually sitting outside. It's a lovely day. Uh, we are very fortunate here in Croydon. And I hope all over the country you are able to listen to us. You can call Radio Ramazan on the telephone number, which Brother Ibrahim can put on the screen. And you can put your answers through WhatsApp as well. Uh, we'll attempt to answer this. Jazakallah. Salam. First of all, let's look at which tax year we are in. And Mr. Riaz, if I could ask you this question, which tax year are we in?
We have just changed tax year, I think in March, April this year. So we are 2021, or are we 2021, sir?
Well,
Or are
okay.
we 21, 22? I think we're 2021.
I will put you out of your misery, Mr. Riaz. The first question you answered wrong, so no marks for that. Hanif, which tax year are we in? 2021, 2022.
It's always one back.
Oh, yeah. Well, actually, the tax year we are in is 2021-22, and it
Oh.
started on the 6th of April 2021, and it will end on the 5th of April 2022. Now, don't ask me why the tax year started on 6th of April. It's for historical reasons. I'm sure you can ask Chef Google, and he should be able to answer that. But the good news is, each one of us who's here, who's a UK citizen, is allowed to earn a certain amount of income, and it's called your personal allowance, tax-free. Now, Tamkin, I mean, you are in employment, you are also getting a pension, and how much of your income is tax-free? Do you know that?
I think it's around 12,000 is tax free. And then after that, 25%. And when I reach a higher level, then it's 40%.
Okay, well, that's another question which is got wrong. So, no harm. The idea of this program is we are not tax experts, or rather, you are not tax experts, is to learn more about taxes so that you don't make these mistakes. Now, it's the same question I'm going to ask my good friend Hanif. Hanif, do you know what is your tax-free allowance?
Unmute. Yeah. You're on mute.
12,500. That's right. Very good. Obviously,
Well,
Hanif,
no, 12,000 and 12,570 is not much in it.
well, every little counts, as you know. So that is the amount of earning, and earnings are very broadly defined. You could be earning a salary, so you could be in employment, even if it's part-time employment, or you could be retired. You could be getting a pension. You could be getting a state pension plus a private pension, or you might have some investment income, rental income. All these are considered to be earnings, and they are taxable. And as Hanif alluded, 12,570 pounds is your personal allowance. Up to that level, there is no tax for you to pay. You only start to pay tax once your earnings or your income goes over 12,570. So, Tamkin, does that answer your question?
Well, what do I do with all the extra income over 12,570? Because obviously we are getting more than that.
Yes. So that's a good question, Mr. Riaz. What you do is you start paying taxes. As simple as that.
But if I'm abroad or in Cyprus or Cayman Islands, do I still have to pay that tax?
Well, the answer is if you are considered to be UK tax resident, then you are liable to your worldwide income. So you might
Worldwide income.
worldwide income, yes. So you might have gone to Cyprus, stay there for 3 months or so. That does not make you a tax exile. You still are considered to be tax resident. However, if you go somewhere permanently, break all your links with the UK, that means, for example, you got an employment in Saudi Arabia, you are there for the whole of the tax year, you only come here for a limited number of days, then yes, for tax purposes, you could be considered to be non-resident. Yes, in which case you will not pay your tax on your earnings in Saudi Arabia, but any earnings which you have within the UK would still be taxable, and you'd still be able to claim your personal allowance. Does that answer your question, Mr. Riaz?
I heard, of course, you hear all these things, that
No, no,
if
no.
you're out of the country for more than 6 months and 1 day, you don't pay UK tax.
You heard a lot of things, and I suggest that you start hearing all the right things. Yeah, okay. But yeah, coming back to Hanif, this point, for example, eh, are you currently retired?
I am retired
Mhm.
and I am also paying tax on my earnings
Yes,
because my earnings are above the basic allowance.
that's right. Okay. So you are getting a pension,
Yeah.
you are getting a state pension as well. And because it is over 12,570, you are having to pay income tax.
I pay 20% on income above the £12,500.
Yeah, 12,570 now. Yes. With that's considered to be the basic rate of tax, which everybody will be paying. But that's Tamkin, that's the basic rate.
That's
You
right.
could end up paying more taxes than that, which is called your higher rate, if your earnings go above a certain limit. And we'll talk about it at a later stage. So the basic rate of tax in the UK is 20%. Then the next rate is 40%. And then the top rate is 45%. And as I said, this is after your personal allowance of 12,570. But the other day, Hanif, we were talking about getting allowances if you are a married person. Do you recall something I mentioned about married allowance?
Yes, if your spouse is earning, uh, you are earning more than them. Your spouse is not using up all her tax allowance. You can actually claim back. I think it's about 10% towards
That's
yourself.
right. Well, yes. So to answer your question, what you are saying is, in your particular case, as your wife is also working, but she's not earning enough to utilize her full personal allowance, you can actually claim that allowance as well. There's a limit. It's £1,250 this year. At 20%, that's equivalent to £250 savings in tax. So it's not an allowance to be sniffed at. It adds up quite a bit. And the good news is you can actually backdate it 4 years. Yeah. So that's a bit of tax saving for you, Mr. Riaz. You know,
But supposing she's earning more than I am, then can she claim mine?
the answer is if you are not earning enough, yeah, you are not utilizing your personal allowance of 12,570. Yes, she can. Okay, it's not We live in a society where we call everybody is equal. I just gave an example specifically because in the case of Hanif, but yes, it applies equally both ways. Yeah.
Very good.
Does that answer your basic question about income tax?
No, it doesn't, sir.
No? Okay. Well, what's your
As
question then?
Muslim, we are allowed 4 wives. So are we getting allowances on all of the 4 wives, and we can, manipulate? Well, no, not manipulate. Be able lawfully to use their tax on the wife 2, 3, and 4.
MashaAllah. MashaAllah, Mr. Riaz. You are being very ambitious.
It's an Islamic
Yes,
show.
I
It's
know it's
Ramadan.
Ramadan. Yes, but I'm afraid here within the UK, while you might be very desirous of having 4 wives, and I think if your wife hears the program, you'll.
It's a question. It's a general question for our brothers who have 4 wives.
It's a very relevant question for a lot of Muslims, but under British law, I find it very funny. Under British law, you're only allowed to have 1 wife. You know,
Can you choose which one to do the tax with?
well, it doesn't matter which one you choose. You're officially only allowed to have 1 wife, and that's the wife you will be claiming the allowances for or with, as the case may be. So, Tamkin put a point that if being a good Muslim, you've got 4 wives. By the way, he's finding difficulty managing 1 wife. Forget about 4 wives. And you
Listen,
find,
if you're gonna dream big.
yeah, keep on dreaming. But we are living here in the real world of taxation. We know that if you live in this country, we have to follow the rules. But one of the rules is, of course, if you are earning employment, then yes, you got your personal loan. But Hanif, supposing you were self-employed, I mean, you consider yourself to be retired, but you're doing all the voluntary work, which is really unpaid work. But supposing you were to take on employment, just because you are getting a pension, do you think that other earnings which you get will be tax-free?
Now, all your earnings have to be taken into consideration. So whatever you earn needs to be declared.
Yes, absolutely right. Because what tends to happen, people think because they are retired, they're not liable to any taxes. That is not the case. You know, you will be liable to your taxes if your earnings are over your personal allowance. And I've just got the figures here now in front of me. Up to 12,570, we know is 0%. And then, Mr. Riaz, can I ask you, what is the basic rate of tax?
It's not 19 and it's not 21, so it must be 20.
Okay, well, that's a good average. And you will get your full marks for that because the basic rate of tax is 20%. And so up to 50,270, you will pay basic rate tax, which is 20%. And then you start going into the next band of tax. And that is
Higher rate.
the high rate of tax, which is 40%. So, Anif, there's a limit. The 40% is up to 150,000. But the side effect of that is once you start earning that sort of money, say if you earn 150,000, you will no longer get your personal allowance of 12,570.
That is correct.
Yeah, it's something to bear in mind. The reasoning behind the taxation is that obviously the government needs to collect the taxes and use these taxes for the social welfare, for the upkeep, for the defense, for the health, and so on. And you know, all of us have seen in this last 12 months the various government schemes that were introduced because of the COVID situation, job retention scheme for the self-employment. There were grants. If you were running a business, the council were giving you grants. Of course, depends on the eligibility and the rules as well. And this is where a lot of the funds have gone. So the government actually collects taxes from us and utilizes to provide the various services. On that basis, if you are a higher rate taxpayer, you are earning say 150,000. Generally, it is viewed that you do not require any personal allowance. Tamkin, do you think that is fair?
Well, if you're on that sort of salary, 150,000, then yes, it's fair. If it's utilized in the correct way by the governments, yes.
Yeah, yeah. And Hanif, it's over 150,000. That's when you start paying the top rate of tax.
Mhm.
And what is the top rate? Do you know currently?
It's 50%.
No, 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 no. I know this one. I know this one. It's not 47 and it's not 46. It's 45%.
MashaAllah. So
I
you've
just
done
wanted
the homework.
I just wanted Tamkin to clarify because he falls in that band.
Yeah,
Well, that's the only one I know. The 45%.
that's the only band he knows, 45%. Well, that is the very top rate of tax. So one way of looking at it is that if you are in that sort of bracket and you are earning £1 million, say for sake of
Which
argument.
I'm not, Mr.
No,
Taxman.
I'm just saying, as a matter of interest for some people, you would be paying some taxes at 45%. So you'd still have 55p in the pound for yourself.
55p I make, or 550 on 1,000.
No, I'm just giving as a broad figure. So that's the top rate, really. To summarize, I would say each one of us, if we are basic rate taxpayers, we can get 12,570. Yeah, once we have reached that limit, we start to pay income tax, and the basic rate of income tax is 20%. We start to pay tax at 40% when our income is between 50,271 and 150,000. And we only start to pay tax at 45% on our income over 150,000, and that will be at 45%. Yeah. And what we did mention was that if you are a basic rate taxpayer and your spouse is not utilizing her personal allowance fully, you are able to claim married allowance. That married allowance is worth about £250 a year. But Hanif, there are certain conditions, you know. If you were born before 1935, you would not be eligible to that allowance.
Yes, I don't think we fall into that category.
No, I support that.
I've got a question, sir.
As long as no difficult one. Yes.
Suppose you have many children. When do they start paying tax? You know, with 4 wives, 100 children, I don't know, you know. Do they pay tax, children under 16?
Yes, they do. Yes, everybody is paying. If a child, supposing, I mean, this we can take a serious point on this. Supposing a child comes in an advert for Pampers, right? And they get a fee for appearing in that advert, and the fees is, for sake of argument, £20,000. Will that child be liable to income tax? Yes, that child will be liable to income tax after offsetting the personal allowance of 12,570. Yeah. So there,
Even if they're 2 years old, 3 years old?
it does not matter. If they are earning money in their own right, they are entitled to have a personal allowance, and they will be paying tax once their income exceeds the personal allowance. Now, naturally, if somebody is 2 years old they are not going to be able to write the check. The parents will be looking after their affairs, or they might even have an agent, so who will do their tax returns. But to answer your question, yes, they are liable to taxes.
That's something new. I thought under 16s or 14s were, until they get a national insurance number, they're not taxpayers. But you corrected me. Thank you.
We are here to enlighten you, sir. They will not be paying national insurance, though.
Uh-huh.
They will be paying tax, income tax. Yes, they cannot be legally employed either. Don't forget, there are those limits as well. Okay, so we've started the new tax year. And if, as I said, 2021, it started on the 6th of April. Have you got your tax return come through?
No, I'm actually on PAY.
Yeah.
I normally get a notification of what my allowances are in a year.
Right. Okay. And Mr. Riaz, coming to you,
Yes.
I mean, you've got a pension.
I've got a private pension. I'm not at the age of getting the government over 65 or 66 or 67, whatever it is. So I'm still under that, but I have a little private pension from a little private source. It's not very much. It's only about 4,200 a year. And I think I'm exempt from that basic rate because I have other employment and they've offset that, taken away the 4,200 and added of the difference. I actually pay the tax on the other income.
Okay, Riyasab, you've made it look so complicated.
Oh,
Actually,
is
it's
it?
not that complicated at all.
Oh,
Basically, what happens is all your various sources of income are added together. So you could be in employment, so you earn a salary of £12,000. You have got a pension coming. The pension is say £4,000, and then if you got, for sake of argument, rental income of 10,000, you add all of these together.
oh, I
So
forgot about the rental income. Yes.
I know more about your affairs than you do. So supposing your income is actually 24,000, you will take away the 12,570, which is your personal allowance. The rest will be paid at tax at 20%. Because you have got other income which is not being taxed through the PAYE system, you would be required to do a self-assessment tax return. And that's what I was getting at. In Hanif's case, because he's got pensions and he's got PAYE earnings, his tax after his personal allowance is adjusted through his personal code. So, Hanif, when you look at your pay slips, you'll find that it shows your code on there. And from there, you can see what tax-free allowance you are getting. But this brings me on to the self-assessment. As I said, it is your responsibility to inform the revenue if you've got other sources of income which are not being taxed at source. And one of the examples I gave was rental income. I know I've had cases of clients, Tamkin, who have, for some reason, how should I put it, forgotten to inform their revenue that they have got rental income coming as well. It's not for the revenue to find out what are your sources of income. It's your responsibility to inform them. And I should inform you that now the estate agents which you use, they actually inform the revenue who their clients are and what rents they have earned. So it's in your best interest, those of you, for some reason, who might have forgotten to inform the revenue that they have got other sources of income. I mean, I just mentioned specifically rental income because we are going to cover the rents and the tax rules and tax legislation on property income in our session soon. So I think people should be aware that rental income is also taxable. Having said that, if your rental income, for sake of argument, is 12,000, and that is the only source of income you've got, well, then you are not going to pay any taxes at all. So there is no need for you to make a declaration because you're not liable to any taxes. So it's something to bear in mind. Uh, People need to take all their income into consideration. And when I say income, people only assume income is from salaries or self-employment, but also rental income. Something, what else would you define as
Well, I remember on my tax forms, I had to write other sources of income, stocks and shares even, and dividends. I remember
that's right?
last year I had to fill out.
No, you're absolutely right. Because what tends to happen is uh, when we say income, investment income, as you said, dividends. But the good news is up to £2,000 of dividend income is tax free. So, you know, when we say your personal loan 12,570, if you do a bit of tax planning, you can supplement that by investing in shares and stocks. And I must inform you, I'm not authorized to give investment advice. Uh, any investment, there is always an element of risk. So please do look into those. Now, in this day and age, for a lot of the Muslims, there are Sharia compliant investments. The companies that are Sharia compliant. So you can actually invest in those. There are brokers who specialize in it. There are ISAs, which are again a tax efficient way of investing. Each one of us can put in up to £20,000 into individual savings account. It's called ISA. And these can be in Sharia compliant investments. So
Okay.
coming back to you, Mr. Riaz, uh, when you're getting dividend income, of course, you have to declare the dividend income in your tax returns, but up to £2,000 is tax free.
So I can get 2,000 on dividends and 1,250 on married person's allowance. That's a big chunk. That's 3,250 you can get uh, relief on.
You are forgetting your big one, which is your personal
Oh yeah, the
loss,
12,000. Yes, yes, yes.
500.
500. Sorry, 12,570.
Okay. Any questions anybody has got at this stage? Hanif, you got any questions you want to ask me?
No, I just wanted to remind Tamkin Saab that you got to have the income from your shares in order to get that money.
Yeah,
Yes,
it's
yes.
£2,000 dividends.
Dividends.
Okay.
That's correct.
I'll give you another tax tip. Uh, some of you might be having a spare room in your house. The children have grown up. You can actually rent a room in your home. It's called rent a room scheme, and you are able to get 7,500 of rental income with this scheme, rent a room scheme, totally tax free. Mr. Riaz, do you think that's a, when you
I would
start?
love to rent all my extra rooms in my house, but I
I
don't
didn't
think
say.
somehow my wife would like. You said one room, I know, 7,500, but I don't think my wife wants to rent any rooms in her house. What about if I have a second house and I rent the rooms in the second house? Can I get 7,500 for that one room dwelling?
How did I think Mr. Riaz will come up with this answer? No, Mr. Riaz. It applies to a room in your principal private residence.
But what about a palace? If you have a palace, so you're talking
Yes,
about principal house,
just
but you might
if
have a
that,
palace or palaces,
of course.
holiday homes, and all sorts of things.
No, I'm Mr. Riaz. I know with your palace in Taunton Heath, all I'm saying is you could rent one of those rooms and get up to 7,500 rent free under the rent a room scheme. If you have another house,
Yes.
cottage, somewhere in the country, which you rent out, that does not qualify for that 7,500. Yeah, you will be liable to those rental income. Now, when I say rental income, it's rental profits, really, not rental income, because from your rental income, you are able to offset what we call allowable business expenses, repairs, maintenance, property fees, estate agents fees, accountancy fees. All these are allowable expenses. However, any interest that you pay on residential mortgages will not be tax deductible anymore. Bear that in mind. So there is no longer any tax relief on interest that monies that you have borrowed for residential lands. If you have borrowed money for commercial letting, so it's a shop, it's offices, it's some hotels, then you are still able to deduct the interest which you borrow, which you have borrowed.
Because that is costs incurred. Is that why you can do that?
Right? Yes, cost incurred. But
So some of us have a lot of costs incurred on all sorts of things.
no, we must be careful. These are costs incurred in running of the business, not running of you personally. Okay, so your food bills are not relating to the business.
Well,
Your
obviously, if I
clothing,
go to a meeting, a dinner and a lunch and breakfast meetings, and I say, well, let's talk business. As long as I talk a little bit about business.
no. This is the real. This is your own interpretation of the tax law. This is not the correct interpretation. I must inform you. As far as the revenue is concerned, entertainment are not tax deductible expenditure. Yes, if you are running a company with staff meetings, you have tea, you have coffee, you have sandwiches at this meeting. This is called subsistence. That is tax deductible. There are special occasions. For example, there is Eid coming up. You are able to allow have a expense for Eid expenses for your staff. That would be allowable. There are special concessions on that. But general entertainment is not tax deductible. Okay?
So all these receipts I've been keeping are useless.
I'm not going to comment on that, but that's what it seems like.
So I can throw the receipts away. Okay.
Well, be careful. Always keep a record of what you are incurring in running a business so that you know you are running the business profitably. You know, that's why you need to have receipts. And the revenue can actually demand to see receipts or invoices for the expenses that you are claiming. The other thing which we're talking about expenses, now that we've gone on to the topic, is a lot of people have been working from home during the last 12 months.
Yes.
And the revenue have a concession whereby you are allowed to claim £6 per week for use of home for your employment purposes. For that, you don't need to have any detailed records. However,
£6 a week.
£6
Okay.
a week, yeah. Every little helps,
Oh,
as they
yes,
say.
that's what I'm working at.
Yeah.
52 years, 52 weeks in a year times £6.
Yeah. But having said that, if you incur more than that, and you can justify that, and you got good records to say, for example, if I'm an accountant, I'm doing a lot of my research from home, which I was doing. The heating was on, the lighting was on, there was the internet which was on. I was actually incurring more expenses. If I could be bothered to keep a detailed record for that, it would be quite correct for me to claim more than £6. So there'll be our listeners, some of them, they have been working during this period from home. If they can justify that, the answer is yes, they should claim for that.
Whether they're in business or whether they're employed.
Yes, because a lot of people even though they are in employment, have been working from home. So the answer is yes, specifically for them, £6 per week. You can put in a claim to the revenue. Either you can write to them uh, where your tax office is. You will find that from your pay slips or your P60. You can write to them. There is online facility the revenue as well. You can claim for that. Yeah. Okay. And if is there anything you would like to add?
I think one of the things that you could mention is child benefit when it stops on certain earners.
Yeah. Yeah. Okay. Well, the thing is, at our age, we are not getting any child benefit, right?
No
we got
comment.
we got grandchildren now. So yes, but it's a very valid point because even when we were earning, and after some time, the child benefit stops. It depends on your earnings. If your earnings are going to be over £60,000, you are not entitled to child benefit. Mr. Riaz,
60,000.
60,000.
Alhamdulillah, all my children are grown up, so and over 18, so obviously.
No, no, I'm not talking about you.
Oh,
I'm talking about your grandchildren
okay.
and your children.
Yeah.
And generally, if people are going to earn
Over
more than
60,000.
60,000, there will be no child benefit. Between 50 and 60,000, it slowly tends to sort of there's a trigger, and it's reduced. So to answer Hanif's question, I know of cases whereby clients have been claiming, or their wives have been getting child benefit, but the husbands, or one of them, the wife, they are earning over £60,000. And in fact, they've had to pay that child benefit back. So
Oh,
my advice to all those people are, if you are a higher rate taxpayer, then you should inform the child benefit agency and tell them to stop giving you the child benefit. Otherwise, you would have to pay it back. You know. So that's one option to look at. I mean, again, when we started this program, we said, well, what is the reason for taxation? And taxation is to facilitate, to help the country as a whole, but then also the poor uh, members of our society through some sort of social security benefits or social security nets. And that's why previously this child benefit was actually a universal benefit. Everybody and anybody, even if you're a millionaire, you would be able to claim that. But a couple of years ago, they stopped that. Okay. Very good question. Very relevant for a lot of people. People don't realize that it is something which does impact on a lot of people. So really, to recap, we started this program on the income tax. We said 12,570 tax free. Then we said, okay, you could claim married allowance in some cases, provided you meet the terms and conditions. Then we talk about a bit of tax planning, whereby you could get £2,000 in dividend income, again, tax free. If you let a room in your house, 7,500 rent a room scheme, tax free. And there's one more which I wanted to mention to you. You could, if you're a basic rate taxpayer and you've got investments, and I'm not talking about ISA, I'm talking about sort of some investment you have whereby you earn interest. Now, we should be very careful as Islamists. We are not encouraging anybody to put money into deposits account or on interest, but there are Sharia compliant investments now, Mr. Riaz. There are Sharia compliant investments. You could you could earn £1,000, and up to £1,000 is again tax free.
yes. And a married person's allowance as well, 1,250 as well. And the dividends of 2,000.
Well, these are some of the basics, but I have got one big seller for you.
Oh,
Yes. And that is called capital gains.
oh, the big one.
So that is the real McCoy. Yeah. And there is a bit of tax planning here. So a lot of our people, maybe they're looking or they've got a second property. Some of them are thinking to sell. My advice to a lot of my clients is, for example, if you've got a rental property, try and have it in joint names, Mr. and Mrs. Obviously, you have to be married to have a Mrs., isn't it? Yeah.
Not in
But
this day and age. You have what do they call it? Partners, or I don't know, legal partners, whatever they call it. I don't know what they call
they have to be on the title deeds.
it. Ah,
Okay. So let's take an Islamic point of view. You are a married couple. Yeah, you got an investment property. I suggest to you, look at the tax angle and see if it is better to have it jointly between a husband and wife. One of the reasons is that, of course, you got your personal allowance. If you're not utilizing your personal allowance in your earnings, and if you got rental income, and your rental income from the property, for sake of argument, is £24,000 after all the expenses, between husband and wife, they will split the profit 50-50, and there is no tax to pay because it is below your personal allowance of 12,570.
good point. Good point. What about when you come to sell it and
That
using
is,
joint names or single names?
well, that is the crunch of the matter. That's where I was
Ah.
coming when
Oh,
I
I
mentioned
jumped the gun.
about capital gains tax. Jumping the gun is nothing unusual for you, to be honest, if I may say
I'm
so.
always thinking ahead.
Yes, I know, of course you are. Yes, but thinking ahead is what I say capital gains. Each one of you, as you mentioned, what about when you're going to sell the property? Yes, you've had the property, you had that investment, but we are specifically saying a property, and you decide to sell it, Mr. and Mrs. You bought the property for 100,000. You go to sell the property today, you're going to get 125,000. You've actually made a capital gain of 25,000.
Yes.
Yeah. But because you own the property jointly, each one of you, so the husband and the wife, each one as individuals are allowed to have a capital gain tax allowance of 12,300 each. So the total
300 on top of your normal allowance.
That's right. Yes. So that is
12,300 on top of your normal allowance.
24,600. So if you have made a gain of 25,000, 24,600 of that is free to capital gains tax. You only will be liable to capital gains on the 400. And Hanif, one more information is, these days, when you sell a property and you made a capital gain, you actually have to inform the revenue within 30 days of sale.
That's something new then.
Something
Okay.
new just come through last year, I think. A lot of people missed out on this because your solicitor, people don't realize when you sell the property or you buy a property, your solicitor actually informs the Inland Revenue automatically. You actually pay stamp duty, land tax. The solicitor does that, and he also informs the revenue this property has been sold. But it is your responsibility to make that declaration and pay the tax if you are liable to it as well. Yeah.
So, supposing the property has been sold for 100,000 more,
Yes.
then 20%, 40%, or 45%.
Yep. You could pay, as far as the properties are concerned, on capital gains tax on residential, you could end up paying 28% capital gains tax. Yeah, 18% and 28%. 18% if you are a basic rate taxpayer, and 28% if you are a higher rate taxpayer. Yeah. Okay. Well, okay, thank you very much. I think we are coming to the end of our program. It's been an hour. I would like to thank my two friends here, Tamkin Riaz and Hanif Ismail. I would like to thank all the listeners for listening to Ramadan Radio, and hope you will join us again next Friday, same time, 3 o'clock, from 3 to 4 o'clock. If you got any questions, please let Ibrahim have them and we'll try and answer them. Next month, we are going to talk again, next week rather, about tax planning. Jazakallah, thank you for listening to us. Please remember us in your du'as. Assalamu alaikum wa rahmatullahi wa barakatuh.